Okay, welcome guys. My name is Gavin. Welcome to another weekly market analysis by Alphachain. It is the 14th of November, Monday, early morning, 9:30. Well, just gone past 9:30. It's almost 10 a.m. It's 9:55 exactly. So if there is one chart that can represent last week, it's got to be this chart here, right? What a divergence that we've seen, especially with two assets that we're looking at right now that have been so correlated for the last 18 months to 2 years. So the divergence began based on idiosyncratic issues that occurred in the crypto space, in the crypto industry. Of course, I'm going to cover that with you guys, but this is a great image to view. We had a risk-on moment, a risk-on week in regards to the equity markets, and that was on the back of the CPI inflation report. But we had a terrible week for the crypto space with a fall of FTX. So you can see an opposite movement rather than a correlated movement. So an inverse move there. So we've seen now S&P 500 really push higher, and the equity markets as a whole were all bullish most of last week. Now that was based, if I look at sort of the key stats here, last week, the Dow closed up 4.2%. The S&P 500 gained close enough to 6%, and the NASDAQ added over 8% in that 1 week space. Now, why did that occur, right? Why did we see that? We can talk about FTX later, the crypto space later. Right now, let's just focus on sort of the broader market macros. Well, let's start with, if I now get this. Hopefully it opens. So it begins with the inflation report. Okay. So the key stat that we want to take away from this is, well, this is a great image, and I'll tell you why. Let me just zoom in a little bit more so you guys can clearly see. Because this is giving us all the measures in one snapshot, in one picture. So we're looking at the US Consumer Price Index year-over-year figure. That has fallen to 7.7%. Then we're looking at the core, right? The core excludes food and energy year-over-year figure. That also had fallen down to 6.3%. And then we're seeing the month-on-month figure, the smallest increment for some time. Okay, this is going back, should we say July, August of last year, right? So of 0.3% rise on month-on-month figure. So this inflation report led to a substantial risk-on movement in markets. Okay, so we saw a lot of the markets drive higher, equity markets, and that followed in Asia markets and so on. Whilst at the same time, the dollar index didn't fare so well on the back of the CPI data. So do note that central banks, their #1 mandate globally has been to fight inflation. And it may seem at this moment that they are beginning to win the war on inflation. Okay, so we're certainly seeing that inflation is beginning to trickle down as that aggressive rate hiking path that has been taking place currently is taking effect in the inflation levels, right? So key points to sort of stress from that, right, is just looking at my notes here. One point that I want to take away from this is that, yes, we have seen now inflation fall by the data that we've seen in the US. This has led to that risk-on movement that's taken place where equities are bullish as investors now pile their money into the equity markets, assuming that we've achieved peak inflation and inflation is likely to fall. Now, one speech that came out overnight was from a Fed member, and this is why Fed member speeches are very important. You must take note of this because this is what's going to give you an insight to what they may do at future meetings. So the Fed member warned about putting too much weight on a single CPI number. This was from Christopher Waller of the Fed, who said that it would take more than just one report for the Fed to ease back its hiking policy. Now, that's a key point there. Are they going to ease, and are they going to sort of, shall we say, the dovish pivot, right? Is that going to take place? Not at this current moment. So the Fed are still fighting inflation. They've only seen this one positive report, and that's taken across the board, across the key numbers that we're looking at over here. Now, we do expect now that the Fed are likely to become a little bit more data dependent. So rather than going from hawkish to dovish, what we may see now is from hawkish to neutral, meaning data dependent, but yet rate rises, continues, but not as aggressive as it has done previously. Okay, so yes, I don't see that the upcoming meeting that we're expecting, the next one's in December, to be a 75 basis point rate hike. We're likely to see maybe a 50 basis point rate hike, maybe even less. It depends on incoming information that we hear from other Fed speakers, other Fed members. Okay, so this was probably the most pivotal point from last week as we saw, this risk-on bullish mood that's come through into the market. It was led on the CPI report. Yeah. Okay, moving on from that, I can't really bring that up at the moment. If for some reason it doesn't load, I may want to bring up something else actually, which is, let's close this. Let's zoom in. Right, so this is a picture of asset classes and their returns from the beginning of this year. So it's year-to-date returns for specific asset classes. Well, we can quite quickly see that commodities are still outperforming. They are up 34% or just over 34%. The dollar has year-to-date risen 15.6%, but that's eased off in the last, shall we say, last few weeks. Oil is up at 14, just above 14%. Looking at gold, gold is still down, even though last week was actually a very bullish week for gold. Okay, so gold has recovered somewhat as the impetus from the weakness that we've seen in the dollar. Okay, so the inverse correlation there taking effect in gold, and gold strengthening last week. So it's kind of weird, right? You would assume that in a risk-on environment, why would you see gold being bullish? But that just shows how much weakness there has been in the gold market, so much so that when dollar index sold off, that's where gold strengthened, even though we're in a risk-on environment. Yeah. Looking at bond markets across the board have fallen and have stayed flat in that region there. But Bitcoin's surpassing sort of the lows that we've seen previously. So it's down 63%, if not a little bit more or less in that range at this current moment. This figure was taken from the weekend on the close from last week closes. Okay. So yeah, so this was a key point to sort of take away, and a review of year-to-date performance. Now, markets did also react in a risk-on mood, not just on the CPI report, but we started to see that the anticipation of the Republican victory that was previously expected, a wave of red, that's what the expectations were at one point. But it seems that it didn't really work out in the Republicans' favor. Democrats have pulled through, shall we say. So minimally in the House of Representatives and possibly in the Senate too. So it seems like the Democrats are on the front foot, shall we say, in regards to what was previously anticipated. Now, we did know that if the Republicans were to gain majority or number of seats in the House, now that would have caused a little bit more, shall we say, instability. Okay, so it will be less stable seen going into the main elections that are going to take place in 2024. So when the presidential elections are going to take place in 2024, the midterms now are looking like it's in the favor of the Republicans. That would certainly cause a little bit of uncertainty when you view what could take place in the upcoming 2 years. Now, it has gone the Democrats' way at this moment, and that also led to a bit more, should we say, risk on, right? And that led to risk on because the easing of tensions in regards to what would Republicans do if they gained majority, if they gained control, if they had locked in the seats that they needed in the House. Okay, so yeah, that was another, should we say, catalyst to what we've seen in from the previous week's session. So, as I mentioned, the riskier markets were viewing a political paralysis at one point, with the Republicans potentially gaining control or gaining a number of seats, which didn't really come through. So that's led to a bit of easing in the markets. So those are sort of the key points there from the risk on style. Another chart that I wanted to also showcase, let it load, is this. Now, we're heading into the final week when it comes to earnings. Okay, so the earnings, let's have a look. So this week we'll have earnings from Walmart, Target, Macy's, Home Depot, Lowe's, all reporting earnings. But like I mentioned, it's a big week for some of these, corporate earnings season, but it's winding down. So you need to be mindful of what the review is of those earning reports. Now, what we've seen here is that in an inflationary environment, businesses can generally pass on some of the higher costs to their customers, but companies typically have to swallow some of the elevated costs themselves as well. So leading to lower profit margins, of course. Now, this showcases that. So what we've seen is 85% of the S&P 500 firms have reported their third quarter profits coming in to around 11.9%. That's a 4 percentage point lower than what it was during the third quarter of last year. Put differently, profit margins have shrunk by 8% year on year. That's a contraction, a first contraction since the pandemic. So we're certainly seeing that the earnings that are coming through now, and that's across the board, right? The only area that we can potentially say that has outperformed is the real estate, right? So if you look at real estate, is the only one that's been beaten the previous year's results and margin. Whereas most other industries and sectors, shall we say, in particular here, yeah. And if you look at S&P 500 as a whole, right, hasn't really performed as they did in the previous year. So that's giving us a little bit of an indication to, okay, now certainly that's going to cause a little bit more uncertainty when it comes to, the upcoming 6 months now, right? Yeah, so that's sort of another sort of key point to take away when it comes to looking at the upcoming 6 months. It's likely to be a difficult one, right? So yes, inflation coming lower may help, but there is a lagging effect, right? Because inflation is at its most ripened now, right? It's at its most severe, if it is the peak inflation, what we've sort of achieved at this current moment. And that's only going to have a knock-on impact on the earning reports that we see in the future quarters, right? And that can have that obviously impact from where we see workforce. That was covered in my last week's session, where we spoke about the number of jobs have been cut in a number of industries, most importantly, the tech industry. So yeah, we're certainly going to feel more of that to come in the upcoming 6 months. Yeah. Okay, now moving on swiftly to, let me just see if I covered all sort of key factors here. So we've covered inflation. We'll look at my notes here. We've covered inflation. We've talked about the stock averages. We've spoken about the political scene in the US. And yes, we've seen the dollar index fall. Okay, so the dollar index back at those sort of key lows as previously mentioned. But one area that I do want to cover with you guys is, let's see if this loads as well, is this. So someone's already sort of requested a view on FTX. Now, this tweet here could be seen as the single tweet that led to one of the biggest and most dramatic events in the crypto industry in the last 13 to 14 years, right? I want to say it's at the top, right? Mt. Gox, there's a number of other sort of, key points there, key events that have occurred, but this is going to be in the top 10, right? You certainly class this in the top 10. And it all started with this one tweet, right? This from CZ, from the CEO of Binance, founder, CEO of Binance. Liquidating our FTT is just post-exit risk management. Learning from Luna, we gave support before, but we won't pretend to make love after divorce. We're not against anyone, but we won't support people who lobby against against other industry players behind their backs onwards. Now, this was sort of the first tweet that came from him that led to a number of outcomes that have taken place. Now, just to highlight the background story, right, I'm going to try and link it to interest rate hikes, right, as we've been speaking about already, interest rates. And then we'll go into the deeper sort of view, the timeline of what's taken place with FTX, right? So before we do that, we'll go into this. Now, in May, the Fed raised rates by 0.5%, highest since 2000, and telegraphed aggressive future raises to tame inflation. So we know that this has been the key theme by most central banks, especially the US central bank, right? And then we went on to see that crypto assets began to fall, right? So from those peaks, those elevated levels that were achieved at the beginning of this year through to sort of 2021, so all those elevated levels. So Bitcoin fall to 40K, from 40K to 18K over the next 6 weeks. Okay, so that's showing that liquidity is picking out the system, and at the same point, what would you need to do? And most capital allocators, what they'll be doing is looking to take risk off the table. So you take your portfolio, you assess your portfolio, you want to make it more defensive. So you take your your most riskier assets, you start to take profits from them and you allocate in something more safe. And that's what occurred over that 6-week period. And then as we saw the prices moving lower, the ones that were the most leveraged and that were illiquid especially illiquid markets, were the ones that were going to suffer in those conditions. It's similar to what happened with, who's the chap in the UK? There's someone in the UK who had one of the biggest funds at one point, and Neil Woodford, read into Neil Woodford. He had a huge amount of investors, one of the largest funds that he began really sort of targeting. Actually, Hargreaves Lansdown were one of the discounted brokerages that were solely focused on sort of offering his funds to their customers, where they have been sued, I believe, with a large number of their investors that have used that brokerage. But okay, moving away from that. So we saw the knock-on impact begin, and that began with crypto hedge funds. 3 Arrows takes a huge loss, right? So they were highly leveraged. They didn't have any of those sort of assets backed in any way. When the prices come down, they couldn't. They pretty much went into liquidation straight away. Okay, so they took a huge loss. Then they had a knock-on impact into some other markets. So we saw crypto brokerages like Voyager had sent 3AC $670 million. And was in the hole also. And that's where the FTX began. Okay, so what FTX did thereafter, FTX is a related hedge fund of Alameda. Okay, Alameda is the hedge fund of FTX. So now you've got a brokerage who has its own hedge fund. They lent Voyager $500 million to weather the 3AC blow. That was the 3rd week of June. Yeah. Then 3AC actually went on to shut down. Okay, they shut down at the end of June. Then Voyager quickly declares bankruptcy in the 1st week of July. So it seemed like FTX, or should we say Alameda, were looking to really help the crypto space by giving the necessary funds needed so that we can sort of, get through whatever liquidations that they had at the time, as all their clients began to withdraw, wanted to take their capital back. So thereafter, you can see how quickly now Alameda is also now down and takes a loss on that Voyager sort of, those funds that were provided. Now, to save Alameda, now this is the sort of key point here. This is probably what is going to be, could cause SBF go down the, prison routes. To save Alameda, SBF transfers from FTX funds $4 billion. Right? These are secured against his 7.6% stake in Robinhood and those FTT tokens to Alameda. This is sort of the key point to take away from this, is that there were losses being made on the Alameda sort of side, Alameda Research, which was the hedge fund of SBF and FTX. Now, to cover those losses, he had taken the funds from his customers, from his brokerage, and sent that over to Alameda to save that fund. Right now, we bring on the timeline. I don't know why this timeline doesn't want to open at this moment. Can't really quite go through it at this moment. But right, so what happens thereafter? Now, this is sort of the key point that I want to stress here is it seems like CZ and SBF had a few issues amongst themselves. Okay, clearly there is, we spoke about, what CZ said in his tweet there. So they had their own personal issues, shall we say, with each other. But it was quickly noted by CZ from the balance sheet that there was a certainly sort of, this liquidity issue with SBF and his firms, both FTX and Alameda. So he quite quickly initially invested $500 million worth into sort of FTT sort of tokens, his FTX's tokens. But thereafter, he wanted to sort of, take that back and pull that out. He made it very clear with his tweets. And then thereafter, we started to see redemptions taking place across the board from clients wanted to take their, sell their tokens, FTT tokens, and also withdraw from the FTX platform. And then very quickly thereafter, there was a liquidity issue, right? Clearly, a lot of these brokerages must be backed one-to-one, meaning that whatever clients' funds are allocated into assets within the brokerage, those funds need to be backed by other funds, right? They need to be backed there. You can't just, use those funds however you want. And therefore, that was not the case. That was quickly established, and therefore we go into bankruptcy in this. Over the weekend, we've seen that SBF has tried to reach out to a number of, other firms and funds and hedge funds and VC firms to get back into sort of, to recover the loss, but no one's going to cover this hole. And this hole could be worth $50 billion. Now, if you're looking at how big of a scale of this liquidation issue is, and of this firm going into bankruptcy, it is more than double the size of Enron. When Enron crashed, they owed $25 billion worth. This is double that, right? And Enron caused a great market crash as well. So it's good to see that we haven't seen that take place in the equity markets, but it is isolated only in the crypto industry. And that's where we've seen a lot of the crypto markets have significantly been impacted by this news. Now, is there a continuation of that contagion effect? Now, I've just gone through these steps here, how inflation, how interest rates, the price of cryptos, and then being over leveraged and illiquid, right, has caused a contagion effect across these number of platforms that we've just discussed. There could be others. There could be others. We know about Sequoia Fund and a number of other funds that had invested massively in FTX have lost a lot of their funds. A lot of their clients are unable to take out the funds that they have within their FTX platform. Luckily, I don't use FTX. And actually, I did have an account with FTX. I tried logging in on the weekend, but I had nothing in there. I just set it up just to have a look around. But fortunately, I'm not in a position where I've lost any funds through these means, right? But certainly we have seen this impacted in the crypto space across the board. One of the sort of key markets to look at, obviously, is Bitcoin, Ethereum, Solana was sort of massively impacted by this. Yes, so there could be a continuation of that contagion effect. Okay, so if we want to sort of look into the week ahead, as I mentioned, you've got those earning reports you need to be mindful of. We've got other sort of key data that's coming through. Again, nothing significant, right? So just the general economic outlook in regards to the data is sort of one to view. Nothing key and pivotal in this week. We do have the G20 meeting that's taking place, the G20 that's taking place in Bali, Indonesia. Towards the end of the week in the UK, we will have the Chancellor of Exchequer, Jeremy Hunt, come out with his long-awaited autumn statement in the House of Commons. That's taking place on Thursday. Now, it was previously planned on Halloween, and then it was delayed as they wanted the Bank of England to begin to raise rates and take their steps forward before making a decision. So they've taken their time. So Rishi Sunak and Jeremy Hunt have certainly taken the time in regards to what they're going to bring out. But we're certainly not looking at a stimulus as what was previously on offer by Liz Truss and Kwasi Kwarteng, her Chancellor of Exchequer. So that's not the case. I certainly see that Jeremy Hunt is going to be leading into the Christmas is going to be Scrooge, shall we say? Yeah, he's going to be Mr. Scrooge. So yeah, we're certainly looking at sort of, more of a tightening across the board. But that should be the case, especially when you've got the Bank of England doing a similar action there. So it's going to be a little bit more difficult for the current economic conditions that we're in, but it's in the long term going to be more beneficial, shall we say? Yeah, so just be mindful of that. And of course, this crypto news. Now, what I'm looking for in the crypto side of things is is there going to be a contagion effect? Okay, now that may be the case. So you just got to keep in the loop of the types of noise that you hear, the news that you read into. Yep. So what you want to hear about is which firms and which individuals or high net worth individuals was massively impacted by the FTX and the drama that we've seen that's occurred here, right? What's likely going to be the next steps in regards to what happens to SBF and Co, right? We know that the entire compliance team quit, and on the day that we heard all this news come through last week. Now we know that the SEC have begun their investigation. We know that where they're based at this moment, there's something about investigations taking place over there as well. Now, yeah, so we'll just have to wait and see if we hear more news in regards to the legal recourse, whilst at the same time, if there is that contagion effect with other firms, other brokerages being impacted by this. What we have seen is over the weekend, I've seen, for example, Binance and Coinbase come out and maybe not show, but maybe declare that they are one-to-one backed, and it's all the sort of key points that you would want your brokerage to be. But certainly, what are the markets looking for going forward? Now, from the global macro standpoint, I would certainly say the focus is going to be whether inflation is going to continue to the downside. And you want to see that in different markets as well, not just in the US. I want to see what happens in the UK. I want to see what happens in Canada and Europe. I want to see some similar action taking place there in regards to inflation. Now, there is a lot of smart money discussing there may be a double dip in the inflation report, meaning that inflation is likely to stay elevated and maybe even move higher. But at this current moment, there is a dip taking place, right? So there is that concern. Now, on the crypto side of things, what you need to be aware of is, as I mentioned, all the sort of key points, the contagion effect and the recourse in regards to FTX and Co, right? The team at FTX. At the same time, just keep an eye on the markets, right? So what you want to see is price actually being supported around that region, right? So we know that BTC USD broke through the 16,000 figure a number of times, twice now. Now, is that the floor now? Is that the support level, or is there more downside to be expected as we hear more news in regards to other firms being impacted? And if that's the case, then yes, you've got to be very mindful of being long in the crypto space at this current moment. Yep. Okay, guys, that's it for me. I'll end the recording and then we can go through some questions.